Hey guys, Ken Boyd with the Accounting Accidentally site on Substack. This article is called The Divorce Cashier, NetFlix, and the Breakeven Point. So I was at a cashier who said, Ken Boyd, my ex-husband's first name was Boyd, and she handed the debit card back to me. So the question is, what do you say at this point? I could have said, well, I always thought your ex-husband was a jerk and you did the right thing, or see you next time. So I went with number two. I bring this up because perceptions can be a tricky thing. They may not have that much to do with reality. The Hollywood actor and writer strike, sadly, it's affecting a lot of people, is a good example. The reality is very different from my perception of the strike, and the strike's impact is a great way to explain an accounting concept called the break-even point that I'll get to in a moment. So let's start here. So there's a common misperception that no one is producing TV or movie or streaming content, which is false. To explain, let's separate content production between US and overseas. In the US, many independent studios are filming TV and film content. This New York Times article notes 39 independent projects, that's a lot, with bigger studios that received exemptions from the unions. And as the Times explains in a quote, to be considered, productions must agree to temporarily follow the terms of the latest proposal that SAG-AFTRA, which are the two unions, have put on the table during negotiations. Well, that makes sense. You're giving the actors and the staff the pay and conditions that the union is fighting for, so let people involved keep working, and it means fewer people are out of work. But for everyone else, we're starting to see some cracks in the wall of support for the unions. Bill Maher is going back to filming Real Time with Bill Maher, which was just announced today when I'm recording. His logic is the entire staff of his show, both union and non-union, have been without pay for months. Why not let some people get paid again until the strike is resolved? Okay, what about overseas? On his Prop G podcast, which I highly recommend, Scott Galloway points out that Netflix has thousands of people working on content production in Madrid. So the overseas production continues. So what's the accounting impact of all this? The break-even formula is a great way to analyze the strike's impact. So let's define it. The break-even formula is the level of sales required to cover all your costs, and it can be looked at as units sold or in total sales, total dollars. And you can look at break-even for a product, a division, or your entire company. And it may seem obvious, but the first goal is to cover all your costs and not lose money. That's the first goal of the formula. We can state it in several ways, but the most common version is sales price times units sold. Start there. We subtract variable cost times units sold, and then we subtract fixed costs and total dollars, and we set profit equal to zero. And what the formula is going to tell us is how many units do we need to sell to break even, which means zero profit. There are some points you should know about the formula. Sales and variable costs that you saw are stated per unit, then multiplied by units sold. Fixed costs, and this is important, are stated in total dollars, and it's important to avoid looking at fixed costs on a per unit basis. To calculate break even, you need to cover all your fixed costs regardless of the number of units sold. As you saw, we set the profit to zero, so the formula provides a level of sales that covers all costs, fixed and variable, and generates zero in profit. So you can think about break-even point in terms of number of units you sell or the dollar amount of sales I mentioned at the beginning. So how does the strike impact the break-even formula? Well, when it comes to costs, there's good news and bad news for studios that can't produce content. The good news is they're not incurring the variable cost to hire writers and actors. But what about the bad news? They're still incurring variable costs for thousands of people who aren't actors or writers, and even more important, they have huge fixed costs for buildings, equipment, and fixed contracts for services that can't immediately cancel. You can't cancel the contract for the cleaning company to come clean your offices if it still exists for another 9 months. So there's all kinds of fixed costs that can't be canceled. Finally, there's even worse news. There's no revenue. As a studio executive explains, if the strike isn't resolved soon, the entire fall schedule of new TV shows will be canceled. And there's a quote, sources tell TV Line that it will take scripted shows roughly 8 weeks to come into production once the strike is resolved. Without new scripted shows, there's far less interest from advertisers and revenue will drop sharply. If you're selling Crest toothpaste, you want to pay for new programming, not old reruns. So what's the fallout? Networks won't have enough revenue to cover fixed costs or the variable costs that aren't related to the strike. The studio and the network's losses will